The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, we're just gonna wait just a couple of minutes for everybody else to arrive. I had to move this workshop a couple of minutes earlier because I actually have a very important meeting to attend that just came out of the blue to me. I would just like you all to confirm if you can see my screen and if you can hear my voice. Great. Thanks, Kato. Thank you, Michael. I'm just going to introduce myself again, just in case you guys don't know my name. I know it's saying Stefan is speaking again, but it's not Stefan, it's Dennis, the CEO of EQ5. We're just waiting for a couple of more people to come. I know that there's a few more registrations. I just really hope they make it. But in any case, I'm pretty sure you guys can see that this session is being recorded. So I'm going to put it online for everybody, just in case they missed it, so we can properly begin. For everyone that just connected, I didn't start speaking about anything important. Everything just started. Do you see my screen with the chart? Or do you see the other screen? Let me just see. Yep, okay, so the screen with the chart, good. Because I have a couple of screens here and I just want to make sure that the main monitor is showing. So I've been working on the rules for the new competition. For those of you that were here yesterday, and I spoke about the competition. I will speak about it again at the end of the session. You will all receive an email tomorrow about the actual competition. Now, I just have to tell you this: we're not a broker that has many rules and obligations to follow and try to trick people into giving them bonuses and things like this. Any prizes that anybody wins are free to be withdrawn at all times. So just like the 250 we gave, any cent you make above that is yours to take, and you can take it whenever you like. Nobody's going to call you and tell you, hey, you made money, let's keep it in there. No one's going to do that. We're just going to let you withdraw your money because we know you need it and it's yours. You earned it. Okay. I'm going to be speaking about very important things here today. These are things that dictate the success of our asset management and our fund management program. It is extremely important what I'm going to talk about today, and you should definitely listen to it again. But I'm going to be speaking about this again and again because rules are extremely important, especially for investing. Everybody needs rules, and they're essential to have. I'm going to minimize my window here. Okay, I remember telling you, well, everybody here yesterday that euro-dollar will continue going up in today's session, and we said that it would go up to the level, here it is. We said it will go up to this level. This is the first stop. And if this gets penetrated, then we can definitely see a very strong uptrend in euro-dollar. And basically, what's going to happen here is we're expecting a cycle to change. By cycle, I mean trend. I'm expecting for there to be many cycles, many changes in cycles as we have a new year, and each year holds different cycles. Sometimes cycles can last for 3 years to 5 years. Sometimes they can last for 12 months and 6 months. But long-term cycles, the ones that we look for, something like this here, over here, this is something that we definitely look for because these are sharp daily moves downwards. There is a lot of money to be made here, and personally I believe that trends are exactly where the most money can be made, and that is a fact. Other things can be very dangerous, but I mean, everybody has their own way of trading. This has been very successful for me and for anybody that I've taught so far, and I'm sure it's going to continue being successful for many, many years. So I am going to begin so we don't take up too much time of today. I believe everyone's here, and who isn't will receive a recording of this session. Before I begin, does anybody have any questions? And if you don't, just shoot me a no so we don't so I understand that you're hearing as well. Okay, we have a question here from Dinesh. He's asking, how did you get your support and resistance in the other chart you showed earlier? I'm going to show you this right now, and then I'm going to explain more about this once we finish this with what I have to educate you today. So basically, I changed the Fibonacci levels. They're totally different. It has nothing to do with Fibonacci. So I use the Fibonacci retracement. But I'm just going to show you here. If you go on this line here, it will highlight, and you press right click. Okay, you right click this. This will come up. Here you can change your lines to be different. Okay, you can put them in dots and in other formats. You can also make them thicker. And this is where you change your levels. The levels I use is 0%, 12.5, 25, 37.5, 50, 62.5, 75, 87.5, and 100. These are the levels that I use, and I can send you these codes so you understand how to do this properly. And I'm going to show you what I do. Obviously, this is best done on a longer scale, longer time frame. You need to use line charts. You don't really need to, but it's advisable because that's exactly where the closing prices are. I'm just going to show you this like this. Okay, so, and I'm going to explain a little bit about today about breaks and trends. I'm going to do this like this so you can see it even work even further back. Okay, so these are breaks and trends. They're not really actual. These are fake outs from trends. But let's zoom in, and I'm going to make it candlesticks. This is a 12-hour chart I'm looking at now. Regardless of what I do, they're always going to be here. And I showed this yesterday, and you can clearly see prices vibrating at these areas. And I can start from the top over here. We start with this one. We don't even look at this one, but you can see prices moving in these areas and vibrating very heavily when they come to these areas. Double tops, what you look at here, you look for double tops, double bottoms, triple tops, head and shoulders formations. This is what you look for. Pure technical analysis, no indicators. Forget about indicators. They will not help you with trading. They will just distract you from seeing the real picture. So I'm just going to make my chart bigger so everyone can see it. Okay, so this will distract you very much if you have indicators. So forget about them for now. I'm going to guarantee you that every professional trader, at least in the banking side, they don't use much indicators. They use indicators for cycles and things like this, but even those are not very important because they can be done by hand, okay, by yourself. You can see price fluctuating in these areas. I'm just going to show one more thing that I showed yesterday, and this is what I'm going to show. Is I'm going to remove every level. I'm just going to leave the 50% level. Because if you didn't notice, all of these are 50%. 0 to 12.5 is 50% of 25%. 25% is 50% of 50%, and so forth. They're just 50% levels. So I'm going to move this to this level over here. Well, let's start with the top actually. And there's nothing at the top, so look at this. I'm going to change the color of the main one to something more solid. And more direct. Okay, so I just wanted to pay attention to the yellow line for now. And I'm going to connect it to my levels, and I want to show you this. As you see, the yellow line has acted as a pretty decent support. You can see it working here, resistance. You can see it working here. You can see it getting broken here, but only to retrace backwards from this line over here. These lines are really powerful, and you really don't need to analyze charts and put in codes and look for some, you don't have to draw your own resistance lines and support. This will pretty much catch everything. So even if I do it at this level, here, I just want to show you the current chart. So even if I do it at the middle level, and I advise you doing it on every level. So look, I can do it here. And I'm going to remove everything. I'm just going to leave the 50% level in here. And you'll understand what I'm doing. As you see, it works pretty well on many areas. You can see it work pretty well. Now, I have to warn you though, these lines are not areas for you to buy and sell. Because if you bought and sold every time this broke, you would end up in losses or in profits. Yeah, it would go up, but it would significantly move downwards if you would not trail your position. And I'm going to go over trading rules. If you combine trading rules with something as simple as this, you can be a successful trader. You really can. As you see, price is moving in a box over here. It's moved rapidly down, and right now it's in a box. And I can show you this by drawing the box. You can see clearly that it's not moving much. And you can put a box within a box, and then you'll see that these levels haven't been broken either. So we're expecting price to go up here right now, and probably go downwards. But if the cycles change, and I'm going to send you all an email because I'm doing my analysis on the euro dollar for this year now, and if I find something that will make money, you will all know about it, and I'll teach you how to do it, and we can even have sessions together on doing this. So do you understand what I'm doing? I'm going to do a full session just on this another time. You can see it holding really well. Can you all hear me and see my chart? Kind of confusing speaking by myself. I don't do this much. Yep. Okay, great. I'm going to teach you this personally. If you guys like a private session with me on this, please let me know. I said everyone my email address is ceo@EQ5fx.com. I will arrange a private session with you when I do have time to show you exactly how you can do this. But it's not only about this. There are rules involved in this game. You know, there's so much more to it than indicators and better spreads and you know, a lot of money, and you can be successful with little money and excuse my language, crap spreads. Yep, I will do, Anthony, most definitely. So, like I said, I will do a proper session on this. Let's do it on Monday, but I will record it for everyone so you can watch it over and over again, and it will just hold my vibration levels. Just like an example. Okay, so this will work really well for you, regardless of how you're trading, regardless of what indicators you use. You will find points of interest, especially if you do it on a longer scale. You can then move on to something like 1 hour, and obviously there will be much bigger gaps between these levels, and then you can add on, once again, the 50% level, even in shorter time frames, such as here. And you can see it work well again. You can do it again and again and again, as many times as you like, but you don't want your chart to become very, very messy. That's one thing that you don't want. Okay, I know this might seem complex, but I promise you, just like how you learn to drive a bicycle or your car, or to be good at your job, or anything else, whatever you're good at, it took you some time. Just as long as you have some desire and some interest, then you will definitely like what I'm showing you here. So I'm going to go into the session right now, and I'm going to explain some very, very important rules that will well, guide you for the beginning. Either if you're a beginner or a pro at this, I'm pretty sure that you'll pick up some very important factors that will help you become even better than you already are. So, the aim and objective of every single trader who enters the financial markets is to make money. Right? We're not here to have fun, we're here to make money. It is a very well-known fact that a very large percentage of traders actually lose their money in the financial markets. There are many reasons for these losses, tons of reasons, but one of the most important is that they do not know how to select the right assets to buy and sell at the right time. Now, I expect tonight that I will give you rules, provable and practical, which will help you, the traders of course, to study and learn how to select proper assets to buy and sell with minimum risk. Now, our aim and objective with these live trading workshops is to basically give you, the investor and trader, the benefit of 10 and more years of experience, which has been very valuable to me, and I'm very sure if you will profit from it, from our experience, it will prove valuable to you too. So in this life, we must have some definite aim to achieve happiness, because that's exactly what life is about. It's not about um, amazing cars and everything. It comes with happiness first. So in this life, we must have some kind of definite chief aim to achieve happiness. Money will not bring all of it. Neither can we help um, others with money alone. The best way that I know of helping others is to show them how to help themselves. Therefore, knowledge and understanding properly given to others is basically the greatest good that we can do for somebody. And at the same time, do good for ourselves. Just like the law of cause and effect states, um, if you provide good deeds and you help enough people to get what they want, eventually you're going to get what you want. Now, thousands of people have personally gone through our trainings. This is very brief trainings, but thousands of people have gone through these sessions, and believe me, a very large percentage of these people still thank us on a regular basis, even today, years after they first done business with us. So I believe that EQ5 will give you more knowledge, will bring you more happiness through money gained, of course, than many other brokers. And if it does, I will be repaid for my labor here today, yesterday, and all the tomorrows to come by simply the law of cause and effect. So I want to welcome everyone to EQ5's live trading workshop. Today's session will give you the essential skeleton of investing and trading before you even begin thinking of trading for yourself. Rules, ladies and gentlemen. Just like the laws of the universe, the rules of the universe, which we follow as a religion at EQ5, especially the law of cause and effect and the law of vibration, rules and laws must be followed. I'm going to talk about 23 never failing rules. In order for you to achieve success in the financial markets, the trader, which is you, must have a definite plan, a set of rules that are part of the trader as much as his name is to her or him. So these rules really need to be, they need to be a part of you as much as, the blood is going through your heart. As much as your name is a part of you and as much as everything you know, you need to follow rules if you want to be successful. And I promise you, if you follow these rules, I guarantee you, here today, you will be successful. Now, the rules I'm going to be stating here are based on my personal experience that I've learned from somebody a long time ago. And obviously, these rules are compiled with many years of experience in the financial markets. And anybody who follows them will achieve success. But again, you really have to follow these rules. And I'm going to shoot right into them. Don't worry about writing this down, because I'm going to send you this in a PDF, and you're going to have the recording in that email that I sent you. So the first one is the amount of capital to use. If you put your capital into percentages as 1 to 100, 1 being the lowest and 100% being the highest, in percentages, practically you can never add more than 5% of your capital on any given trade. And I really recommend this. Don't add more than 5% on any given trade. Think of it this way. If you open a trade, if you don't open a trade, you can't make money. So your money is going to waste. But if you lose all of your money, you can't open a trade. You see the logic of that? You need to protect your capital. Your capital is what will basically help you to seize your finances, achieve higher income than you currently are. Because many people are capped at certain incomes, whether it is a pension, whether it is a specific salary, whether is it some investment that are not generating enough rewards. We're all capped. So we need to make that capital work hard for us. Many people work hard for money their whole lives, only to see it go very, very quickly. I've recently read an article of a couple in the UK under benefits, and the government decided to basically do an experiment, I guess, and they gave them all of their benefits at once in cash, £27,000 for 1 year. What did this couple do with the money? They went and bought video games. They spent money on a raccoon. They bought TVs and things that they could not really afford in their life. And what happens to all of that money? It's gone. They cannot replace it on buying liabilities, because the video games are liabilities. You waste your time on them. The raccoon's not going to make the money. I mean, it's not like they're going to have a circus at home and people from the neighborhood are going to come and pay them. So these people created liabilities in their life by wasting £27,000. The logical thing to do is at least leave something on the side, because months and days go by very quickly and we all need food and rent and so forth. So instead of working hard for your money, you need to make your money work hard for you. And how do you do that? That is by making correct investments. Protection of capital. Use your capital correctly. There are many trading days to come. Thousands of opportunities go by a minute, a day, an hour, a year. So if you miss one, forget about it. And I'm going to talk about that. So the first rule is use your capital correctly. Never, ever open more than 5% on a trade, and I would even recommend to stick to 2%. What I'm going to give you after is this here. It is in an Excel format. This is a risk management calculator. So let's say you invest $1,000. Your risk is 2%, and you're opening a trade size of 0.05. Sorry. Here we go. You would only type in the green bars. You have a guide over here on the right, so if you expand this, you will see the guide. It will explain to you exactly what to do. I will explain this properly later on again. Let's say you invest $1,000. Your risk factor is 2% per trade. That means $20 per trade can be lost. If you open a position size of 0.05, your estimated stop loss on euro dollar would be 40 pips. If you want to risk 5%, your estimated stop loss is 100 pips that you can risk. Okay, so I'm going to explain this to you properly later on so you guys can understand it. But logically, what we would be doing is, let's say on a $10,000 investment, risking 2% is 200. Okay, the pips you can risk is 400 pips. You don't want that. I'm going to explain this to you properly anyway later on, so I can continue with the rules. Number 2 is always use a stop loss. Many people that I've saw who lost money in the financial markets actually lost because of not having stop losses or doing this. I'm just going to put an order over here, and I'm not going to use it. Let's say somebody opens a sell position here, and what they would do is obviously have their take profit. Let's say they put it at 90 pips. And what they would do is they would probably have a stop loss of about 45 pips, because people on the internet say that you should have 2 to 1. And let's say they open this position and price starts setting up. But all of their indicators, stochastic and blah, 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 is pointing downwards, telling them soon it's going to go down. But it doesn't. And many people do this and this, or even remove it. And before they know it, price is up here and they're out in one trade. And I'm going to talk about that later on. So, always use a stop loss. Always protect your trade as soon as it opens. Not in a minute, not in 2, but as soon as it opens. And our platform allows you to do this way. If you press this button over here, up here, you can put an automatic take profit and stop loss. You see? So if I do this and this, I'm going to open just one test trade, just to show everyone how this is going to work. My take profit is added and my stop loss is there. If I want to move it, I just go on SL and I drag and drop. Drag and drop. This little shield over here will help you put something even more important, and that is a trailing stop. Once you put the trailing stop, you don't need this anymore. Because what it will do is when you come in profit, in this case scenario, 11 pips, this will go up. So that means we're securing profit, but I'll speak about this a little more later on. Okay, so do not move your stop loss. A majority of traders, majority of the losses our traders have seen are because either they do not use a stop loss or they move it and hope that the trade will reverse. Forget about hope. Hope doesn't exist in this market. When you're trading, you take hope and you leave it outside of your front door. Use hope when you're crossing the road, when you're driving your car, when you're going to play the lottery. Use hope then. But don't use it in the markets. Because if you use hope in the financial markets, you're gone. I promise you, you're gone very quickly. So don't be basically a trading clown or a magician. There's no magic here, just pure facts. Going to number 3, some of these rules are very quick, so I'm going to explain them in bullet points. Number 3 is a very logical rule, and that is never overtrade. This would basically violate rule number 1, your capital rule. You need to protect your capital. And if you overtrade, you're putting your capital at risk. And that is one thing you cannot do, because this is your hard-earned money. And even if you made it easily, you have to treat it well. Because if you do not treat your capital well, I promise you it's not going to treat you either well, and you're going to be out of money before you know it. Number 4 is never let a profit turn into a loss. And this is very important. What we have here is a very small profit, 4.4 pips. This is not something that we're happy with. We're at 6 now, at 5. So that's fine. But as soon as we come into something more serious, obviously our trailing stop will work. But if you do not use a trailing stop, I recommend fully moving the stop loss into profit. You need to secure profit, because the last thing you want to do is turn a profit into a loss. And that's a big no-no. So what I recommend is, after you have a profit of about 10 pips, or even less if you're scalping, raise your stop loss into profit or trail it, so that you'll have no loss of capital, and in the best words that I can put it, a win-win situation. That means that you're only at risk for about 7, 8 pips. So if you can secure your profits, I mean, that is a great investment. And eventually, when we have a proper track record of you trading for 1 month, we can see your win ratio, because we will use the law of averages. It will dictate to us how many trades out of, let's say, 100 that you open, how many have you won? What have you been doing to win these trades, and what have you been doing to lose them? This is basically our trading plan creation. What we would do is we would speak to you personally, create a trading plan for you, but first we need a track record. We need to see what you're doing. So if you're winning 1 out of 10, that's not good. So that means we need to change the whole system you're doing. If you're winning, let's say, 8 out of 10, but you're in the red, that means that you're closing your profits too quickly, but taking on losses too big. And that comes into trading rules here as well. I'm going to go number 5 right now. Number 5 is, do not buck a trend. What I mean by this is, do not ever, and I capitalize that, ever buy or sell against the trend. If the trend's going up, don't go sell. Okay, these are very dangerous strategies, and you can lose a lot of money. Trends are something that we go with. We need to identify trends and use them to our advantage. They are powerful, powerful, powerful ways of making money. So never buy or sell if you're not sure of the trend, according to obviously your research and what you see in the charts. If you're not sure, don't open a trade. Wait, analyze. There will be many opportunities. The market gives us opportunities all the time. Going to number 6. Number 6 is a nice rule. When in doubt, get out. And don't get in when in doubt. If you don't feel like trading, don't open a trade. I think that explains it. When in doubt, get out, and don't get in when in doubt. Number 7 is trade only active markets. Keep out of slow markets. These are dead markets, and they have nothing for you. No money can be made, and the risk is far, far too high to trade inactive markets. Stick to majors, stick to interesting things. There's plenty of volatility there for you to close your trades and open them, and the spreads are not as big. Number 8 is equal distribution of risk is essential. Trade in a few different and not correlated pairs, if that is possible for you, of course. Avoid trying to put all of your capital in one trade, in one pair. So what I mean by this is, let's say we have a position open here, but we find another opportunity and we open another trade. And then we go on something that's very correlated. You see Euro USD and GBP USD at many times is connected, very connected. I'm going to show you this right now. So we have a 1 hour chart here, 1 hour chart here, and you can see, I just want you to pay attention to this, up, down, up, up, down, up. Not identical, but very similar. So if you're going buy here and you go buy here, but prices go down, you're losing twice. Something better to do is, for example, go on the Canadian dollar. Avoid two things. As you see, there is a much sharper drop here than on the other pair. And you can see that here as well. And you see this is a massive drop. So these are different pairs, so it's better to invest in two different pairs than invest in two exactly the same pairs. So equal distribution of risk is very, very, very important, because if you lose on one trade, you can at least gain something back or even make a profit on the other. Number 9 is something that I'd definitely like to recommend people is, especially if you don't have too much time in front of a computer, don't trade with orders. Don't put orders, because you can set your take profit and stop loss from an order, but it's going to get activated even if you're not there. So this is quite dangerous. Trade at the market. This is my recommendation. If you want to be a trader, trade at the market. Even if you have 20 minutes a day, I'm pretty sure you can do much better at those 20 minutes than leaving pending orders, because it is very dangerous, and I would definitely not recommend it to anyone. Trade the market. Number 10 is, don't close your trade without a good reason. Follow up with the stop loss and protect your profits and limit your losses. Okay? If I feel this trade is going to go down, before I open my trade, I need to know my risk. So I'm not going to do the risk management because this account has much more money. But if you can handle a loss of $31, let's say, on your account, and still be fine, that's under 2%, for example, you have to acknowledge your risks and take them to heart. So if you can acknowledge your risk and don't let it affect you mentally, then by all means, trade. Okay? But don't ever just close it for not a good reason. If you have a trade open and the NFP is coming up and you know that your stop loss there might be slippage, sure, that is a good reason to close your trade. Try and avoid those kind of announcements, because they can destroy you. Slippage is a very dangerous thing. The reason slippage occurs is because there is so many orders at one given time that the banks can't process everything. Their computers and programs aren't that fast because there is billions of orders coming in. So, well, not billions, but millions of orders coming in. So that means if your stop loss is here and price shoots down rapidly, you might get closed out here. So instead of losing $30, you lose $115, and that's one thing that you don't want. So try and avoid announcements. If you have trades open before that, close them partially, or raise your stop loss a little closer, but I recommend avoiding those announcements because they can eat you up. Number 11 is accumulate a surplus. What I mean by this is, after you make a series of successful trades, put some money into a secondary account. We have no limits of live accounts or demos you can have with us. By having a secondary account, this is something that I would call an emergency account. In times of panic or in times of opportunity, you can switch between two accounts very quickly, and I'm going to show you how. Just by going here and pressing this button, the more accounts you have, you can log into all of them. You see, I can switch to all of these accounts and demos and lives very quickly. So have assets, create multiple streams of income by having a surplus on the side. So let's say if you have an investment of $5,000 and you make $5,000, let's say you make 100% ROI. My recommendation to you is to take 50% of that 5,000 profit and put it into another account just as a safety net. That means that whatever happens, you're only going to lose 50% of your capital. Even better, put the 5,000 profit into a secondary account in case of anything, emergency, whatever. It's very easy for you to withdraw that money. You have full access to it. You can trade in two accounts. There's countless opportunities. Number 12, never trade just to be in the market. A successful trader, and I'm sorry to burst anybody's bubble here, is a patient one. If you don't have patience, develop it. Just like you learn to speak, learn to be patient. Put sticky notes all over your desk. Put an alarm every 20 minutes telling you be patient. Read books about it. Develop it. If you want to be successful at this, become patient. Some people say that a successful trader is a boring trader. So just relax. Don't go too quick. Number 13 is never add on a losing trade. This is one of the worst mistakes a trader can make. And I'm going to demonstrate it to you here. We're almost in the minus here. Okay? Let's say this candle, comes down here. But I believe that the price is going to go up. So I open another trade here. Now I have two trades going up, but market keeps going down. And then you open another one downwards. Unless you really know what you're doing, don't do this, because this will kill you. One trade is enough on pair. If you made a mistake, deal with it, leave your stop loss, let it get hit, forget about it, we go look for another opportunity. We're going to number 14. Never get out of the market just because you lost patience, or get in the market because you're anxious from waiting. Sometimes I sit at the screen and I look at this pair, I see nothing. I go to this one, I see nothing. Go here, go there, go there, go there. There's nothing. Use your time better. Go read a book, go spend some time with your family, go for a walk, go for a jog, go to the gym, start a blog, do something else rather than open a trade and lose money. I told you your money should be an asset and not a liability. These investments must become assets to you. Maybe what I'm saying sounds too hard to do, but it's not. And I'm going to explain to you in the coming sessions how I done all of this. I mean, if you looked at me 10 years ago, you would say there's no way this guy could run a brokerage, but here I am. Let's go to number 15. Avoid taking small losses. Avoid taking small profits and big losses. This is one of the other major mistakes I saw people lose money on. People would see something like this. Let's say like this on my chart right now. I'm winning 4 pips. And I see that, there's little momentum upwards, so I close the trade and I open another one down. Or what I mean is, try not to take very small profits and hang on to your losses. If you're going to take a profit of 5 pips, then be ready to take a loss of 2 pips. You understand? It's very important to not follow this, because I'm telling you, I've seen people lose. Well, I've seen people make massive amounts of money in a number of days. I've seen people turn $8,000 into $35,000 by closing little profits, and then they make a few wrong trades, and woof, they're out. They break those rules. They move this, or they don't even trade with this stop loss. They don't even trade with this. And that is a recipe for disaster. I'm telling you, a recipe for disaster. I've seen people make 300% and lose it in 2 trades, or even 1 trade. The best scenario I have is a gentleman who invested $25,000. Now this guy lost a ton of money. I've seen his other accounts and other brokers, and he's lost a ton of money. And I looked at his statements and I see profits of 8 pips, 6 pips, 10 pips. Biggest trade is 20 pips, and that's because he's trading the news. And then you see losses, 30 pips, 40 pips, 100 pips, 70 pips. So how can you expect to be profitable if your losses are always bigger than your profits? It's like wanting to get rich by working for $1 an hour for an hour a day. You can't become rich. The same thing. There's no logic in it. I mean, you're hurting yourself only. And what does that do? That destroys your mentality. Very soon, if this trade goes into just a few more pips profit, you will see my stop loss move automatically into profit. And I hope that happens soon, so I can demonstrate that to you. Number 16 is never cancel a stop loss after you placed it. If I move my stop loss here, don't cancel it. Okay? Don't drag it down. Think of it as unmovable. Think of it as the heaviest thing in the world, and you can't move it, and it's for your own good. If you move it, it's a really backfire on you. Leave it there. The only place you can move it is into profit, not downwards. Only into profit. Number 17, avoid getting in and out of the market often. What I mean by this is, again, quick trading. Don't pop into the market, get out, go to this one, go to that one. Relax. There's plenty of time. Even if you have a very big deadline coming up, I promise you, if you remain patient, you can make more money than you would running around opening a ton of trades and being very, very active. So I'm almost done here with these rules, but like I said, I'm going to send them to you, and I really, really hope you follow them, because these rules have allowed us to manage massive portfolios of our clients in our fund management program and be very, very successful. There are people who turn 20,000 into 70 in a matter of days. Not them, but us doing it for them. There are other accounts that turn from 10,000 to 30,000 in a matter of months. And it's not by luck. These are proven statistics. These are rules that let us be successful. So, number 18, and this one's very important. Be just as willing to sell short as you are to buy long. Never let your objective be to keep away from the trend. Your objective must be to keep with the trend and make money. This is your objective. You remember what I said in the beginning? I said you're here to make money. This is your objective. So be willing to sell and buy. What I mean by this is, don't look at the market and say, don't look at this here and say, oh my God, it's here, we have to sell. So only look at the downside and start selling, and then poof, market flies up. So forget about indicators, forget about these lines, forget about everything. And we're going to start slowly from scratch and explain to you step by step what you have to do. But if you don't follow these rules, I promise you, you're going to be out of this market just as quick as you came in. Number 19, never buy because the price of an asset is low, or sell just because the price of an asset is too high. And this is totally the opposite of stochastic. Many people would, and let's just stick stochastic in here. So let's use the most common setting everybody else uses. So look at this. You see, if you look at it down here, yeah, sure, it looks amazing. And it says it's overbought and price is about to start going down. The price is going up and it's going to continue going up. Most likely. So don't sell just the price is overbought. For example, I bet you many people sold over here because they saw shadows over here, and probably stochastic was pointing down because there was such a big move, and boop, up we go, and everyone's out. You have a question? Okay, so the question is how to identify the current trend. Are we supposed to look at day charts or hour charts, etc.? Okay, identifying the trend is sometimes a little tough. It's not the easiest thing to do, and I'm going to show you just this over here. This is a very nice preparation for a change of trend. There is going to be a change of cycle in trends this year. Like I said, I expect euro-dollar to go much higher than what it is today. But how to identify trends, well, that's a much longer session. And I said we're doing, I have this written down, where did I write it? Let's do that session on Tuesday. I'm going to send you all an email, and on Tuesday I'm going to explain to you how to exactly identify trends. We're going to have to do a lot of work, and the session will be about 2 hours. So I hope you have time on Thursday, and I'm going to explain that to you properly then. Is that okay? Okay, great. Perfect. I'm going to try to do this every day. I'm going to try and explain to you guys different things, but please, these rules that I'm telling you are very, very important. And I promise you, if you break them, it's not going to help you, and it's not going to end good for you or for anybody else. Every time I've broken my own rules, I ended up losing money. Maybe not on that trade, maybe not on the next one, but surely on the third, fourth, fifth, sixth. It happened, and if it happened, it would destroy my psychology. And you know, our mindset is very important. How you feel is very important. So, where did I stop? I stopped at never buy an asset just because it is high and low. Okay. So never buy because the price of an asset is too low, or never sell because it's too high. Don't do that. Forget about this nonsense that many people have told others, that you have to buy and sell. It's overbought, sell it. It's oversold, buy it. Forget about that. Forget about the mass. If you follow the mass, you're going to end up like the mass, and that's 95%, 90%. We don't want to be there. We're going with number 20, and we only have 3 left, 4 with the 20th. Be careful of opening trades at the wrong time. Wait until the asset is very active and has crossed resistances before buying, and wait until it has broken support before selling. You see, don't listen to me on buying this pair here. It is at a decent resistance level, and you can see it here breaking it, but then penetrating back downwards. So it's rather dangerous of doing something like this. So if you were to open a trade over here to buy once it broke, but I recommend always waiting for that one candle to finish. So let's say if you bought here, and okay, we don't have a take profit, but your stop loss would have to be 44 pips in order for you not to get hit. What I mean by this is always wait for one candle to be done. Okay? Because you see here it's broken and then it just retraced back. Here it broke, it retraced back. Wait. Broke here, buy. Now, it will not always work. It will not always work. And I'll find you scenarios where it didn't work. But if you use this, as you see here, it broke, went up, but then just shot back down. You could have made some money here. Could have made some money here, but still would lose it. As here, you see it broke down, you would probably sell here, and you would be out of the money. But majority of the time, you would be in the money. And that's what's most important. But again, you see, it's not only about this. There is so much more. There is so much more involved. And I told you yesterday, training will never finish. Just as long as you're with us. And I don't care if you have an account or don't have an account. Training is essential. Do you think, I'm sure many of you here follow football. Messi doesn't just go to football games and goes to training once a week. He's at training every day, every single day. I remember when I think Gareth Bale signed for Real Madrid, he wanted to impress his teammates, so he came 2 hours before training started to begin his training, and he found Cristiano Ronaldo there training. So it's not a coincidence somebody is great at what they do. It's practice that made them. Okay, I didn't move my stop loss. As you see right now, it's in profit. So it's locked me 5.8 pips in profit. So if this trade goes even higher, this will keep following it. That means I'm securing my profit. This is very, very important. Sometimes you'll get stuck out at 5.8 pips, or 6, or 7, or 8, or 10, but it's better than nothing. It's better to secure your profits. I know it sounds like you're taking small profits in, but you are not physically closing those small profits. If you physically close those small profits with either take profits or closing it by yourself, that can become a recipe for disaster. This is me securing my profits automatically. And price is going upwards, so if it continues going up more, you will notice that my 5.8 will become more and more and more until it reverses downwards. But again, we're going to speak about this in the trend seminar workshop that we will do on Tuesday, because this is excellent for trends. It actually really helps for trends, and you're going to have to start changing the parameters here once you get into bigger profits in order to secure even bigger profits. Because as you see here, for example, this scenario here, price flew up, so you would have been in great profits, but here you would be stopped out, and then you would lose out in this move. You would also be stopped out here, and you would miss out on this move. So I'm going to teach you how to do that properly in that session. So I said, number 20, be careful of opening trades at the wrong time. Wait until the asset is active and has crossed resistances and supports before buying, until it has broken support before selling. Let's go to 21. If you really aren't a professional, and I don't care if you've been trading for 10 years or 20 years, if you haven't handled massive amounts of money, don't hedge. Never, never, never hedge. If you are long on a pair and it starts going down, and you think that's it, it's going down, but there might be a chance of it going back up, don't sell it short just to hedge it and try and make some money. Get out of the market. Take the loss and wait for another opportunity. Let your stop loss do the talking and not you. We're going to number 22, and that is never change your position in the market without a good reason. What I mean by this is, let's say we're going long on this, and I've told you that price off euro dollar will be heading up towards most likely this level up here. And this would create us a decent double top, or even a triple one if you like to call it. We would not start changing our opinion on the market until this level is broken. Okay? So price is going here, and then it could go here, and if it's broken here, we're then looking at a longer term trend and we're going to 120 and upwards. Right now, our next resistance is 113. It is a decent one, not a major one. No, it's not a major one, but it's decent. Okay, so never change your position in the market without a good reason. When you take a trade, let it be for a good reason or according to some definite plan. Then do not get out without a definite indication of change of trend. So if you're in for the long term, and I suppose you really want to make money in this business, so you would be in for the long term, don't change your opinion unless you have facts. Not just a hunch. Oh, it might go down from here. Forget about mights and hopes. I told you about this. Forget about those things. Hope will never make you money. We're here at the final one, and that is avoid increasing your avoid increasing your trading after a long period of success or a period of profitable trades. Be happy. Have daily, weekly, monthly, quarterly, and of course yearly goals that are connected. What I mean by this is this. The first thing that I said is avoid increasing your trading after you're successful or have a number of successful trades in a row. Let's say, I'm here. It was this booster that I have. Can you guys hear me now? Okay, perfect. Very good, very good, very good. I'm sorry about that. It is those boosters that I have for the internet, and they were set usually after a while, a bit less. So I said avoid increasing your trading after a long period of success or a period of profitable trades. What I mean by this is you need to have goals. Okay, goals are the backbone of anything. They are the things that you do things for. For example, imagine going to work without a goal of getting a promotion, becoming the vice president or the CEO or anything. How could you ever achieve that? It would be random, right? You would achieve success randomly. And if you depend on randomness, how many times out of 10 do you think you're going to achieve something? It's not going to be much because that's luck. That's luck. And that's the one thing that we don't want to base things on, because that's gambling at the end of the day. So I'm going to explain this again in a bit more detail. When you have achieved your goal, and again, daily, weekly, monthly, quarterly, yearly, all of these goals must be a little higher than the other. So if your daily goal is to achieve 5% return, your weekly should be just a few percentage higher than that. And the logic I'm using here is we aim above the mark to hit the mark. What I mean by this is if your weekly goal is, let's say, 50%, we put it at 50%, even if we achieve 40%, that's still amazing. Even 30 is still good. So we're aiming above the mark to hit the mark. Goals are essential, and in tomorrow's session, I'm going to explain a little bit more about creating goals. So when you decide, I'm done with the with the rules. When you decide to take a trade, be sure that you're not violating any of these 23 rules, which are vital. Ladies and gentlemen, they're vital and very important to your success. When you close a trade with a loss, go over these rules, at least in the beginning. Go over these rules and see which rule you have violated. Then make sure that you do not make the same mistake again the second time. Experience and investigation is what made me successful, and experience and investigation will convince you that the value of these rules is priceless. Observation and study will lead you to a correct and practical theory of success in the financial markets. Now again, observation and study right now is for you. Your first thought must be how to protect your capital. And I mentioned this yesterday about how we manage funds. Preservation of capital and protection of profits is essential in this business. So the first things first, protection of capital, and that's the first rule that I stated. You must make your trading as safe as possible. It must be as safe as possible. Eliminate as much risk as you can. And this is how you increase your portfolio size. By increasing your portfolio size, you increase your rewards. By losing and winning, you increase your experience. There is one safe, sure rule, and the person who will follow this rule and never go away from it will always keep his money and come out ahead at the end of the year. I guarantee you this. This rule is the first rule I stated. Divide your capital into 10 equal parts of 100% and never risk more than 5%. And I even recommend 2% for the beginning. I'm going to send you this over here that I'm using, and this will help you understand how much you can risk per trade. So what I'm saying is, basically, if you start with $1,000, you should not risk more than 50 on your first trade. And the way to limit your risk is with a stop loss. You can always find new opportunities to make profits, just as long as you have capital to operate with. You remember what I said? If you lose, if you don't open a trade, you can't make money. But if you lose all your capital, you can't open a trade. So taking heavy losses or heavy risks in the beginning puts your capital in danger and impairs your judgment, actually. I already told you guys that I saw people lose $25,000 on one trade. I saw a gentleman lose $25,000 on one trade. And I know for a fact that this person needed this money to feed his family, and he lost his investment on one trade. You need to trade in such a way that you will not be disturbed mentally by a loss. I already told you that, mindset is essential, and I said this yesterday. Losses can destroy your confidence, can destroy your judgment, and they will just turn more losses. They will just create you more losses and more problems at home and in your mind. So trade in such a way that you will not be disturbed mentally by a loss. If it comes, and when it comes, you won't be disturbed by it, because you know that you can risk X amount and you're fine by that risk, because you know that risk provides reward. Because without risk, there's no rewards. Without rewards, there are no risks. So even better, it is to start with something like 2% risk, or if you have enough capital, even less. And I fully recommend that when you trade live, you keep your risk per trade between the mark of 2 and 5%. This will be ideal, and when we trade together next week, which we're going to start trading from next week live a bit more, we follow not only this rule, but all the rest. Now, I was speaking about myself when I spoke about 10% risk. I usually have a 10% risk on an aggressive side. I have 3 models that I do trading with, and this is in our fund, where we manage people's funds. It is a conservative, medium, and aggressive. A conservative model is between 2 and 5% risk. Medium is between 2 and 4% on the conservative, 5 and let's say about 8, and aggressive is basically about 10% risk. These trades we don't take much. Our stop loss will move a bit higher pretty soon here. as the trade is moving into profit. So in tomorrow's sessions, I'm going to explain the following things. I'm going to explain about stop losses, changing your mindset, the risks of overtrading, the benefit of protecting your profits, and the very, very important lesson, when to trade the markets. And obviously there's going to be many more, but I will let you ask me as many questions as you like right now. I have to call this an end because I actually have a very important meeting coming up in just 10 minutes. So I really have to rush out of my house. Does anybody have any questions? Oh, okay. Here we go. Thank you, Timon. Thank you, Timon. Thank you for coming. How to identify the right assets? Well, Dinesh, it is very important to understand our capital. Thank you, Peter. It's all for you guys. Like I said in the beginning, it's the best thing that we can do is teach you how to help yourself, and this is the best way to help you guys. And I thank you all very much for coming to this session. It is recorded, so you will receive this recording, and tomorrow I will send you another email telling you exactly when tomorrow's session is. But I just want to answer Dinesh's question. It's how to identify the right assets. Like I said, we want to keep trading in active markets. Active markets are something that has volatility. Euro dollar has volatility, and pretty much every pair that you see on my screen up here, Euro USD, GBP USD, AUD USD, Swiss franc dollar, New Zealand, so the Kiwi, Euro GBP, these are all very active markets. But to make this even better for you, I'm going to send you personally an email on which markets to trade. I'm just writing this down. And what times as well. Okay. I have your email address already here, so I'm going to mail you as soon as I come back from my meeting. That will be in a few hours. Michael, I will actually send it to everyone, but I meant for my personal email. In that personal email, I'm going to send you the rules that I've talked about, and I really want to go over these rules tomorrow. These rules have helped us manage more than $30 million of client funds and not even lose one account. So we've been very successful with this. Things have gone well, and it's because of these rules that we've become successful. And our, like I said yesterday, but I'm going to repeat today, EQ5 is all about two things. Fund management, so we manage people's funds, and then we teach people how to manage their own funds with the principles how we manage funds, if that makes sense. So we're mentors as well. There are no charges for this or anything like that, so it's all free. So I'm going to send all of these things to you. You're going to receive a bunch of information from me in a couple of hours. Thank you too. Thank you everyone for coming. And I'm actually really, really happy that you all came. And I look forward to these even more. I hope you guys benefited in some way. And like I said, tomorrow's session is about stop losses, how to use them properly. I'm not going to just show you how they work here. I'm going to explain to you about changing your mindset, the risks of overtrading, and how not to do it. Obviously, the important value of protecting your profits, when to trade the markets, and obviously quite a few other lessons. Tomorrow's session will be a bit longer, and I will send you an email in less than 24 hours from now. I thank you all very much. I'm going to have to go. I wish you all a good day wherever you are, and a good evening for everyone else that's in the evening or in the morning. So have a great time. I wish you health, happiness, success, and I'll talk to you all soon. Goodbye. I'm going to close the webinar. Take care.